Hi everyone, hope you all must be doing great. So today we are starting with our MTP mock test paper which is recently released by ICI. They have just released it on 9th of March and today we are discussing this paper. So I'll be discussing with you in detail, that is our section A, that is income tax law, 50 marks, out of which you understand that 30%, this is 15 marks is related to your MCQs. First we will be discussing MCQs and then later on for 35 marks we will be discussing our descriptive paper also. I would highly recommend you that please take out your register, your calculator, your pen and start solving this paper with me. While solving the paper, I'll also discuss how you should present this thing in your exams also. And also while solving, I'll be discussing the provisions also in detail and also the provisions which are something related to that particular question. I'll be discussing those provisions also with you because here my objective is to first to discuss the paper. Second thing is the presentation, which how you should present this in your examination. And third most important is how to revise your concepts also. So I will make this video in detail. I'll not be just rushing through this video. I'll be making this video in detail so that you can easily understand the concepts also. Okay, so let's start with the first question. It says Mr. Kamal, age 45 years. Okay, this person is not a senior citizen. Commenced operations of the business of a new three-star hotel in Delhi on 1/4/2023. So he has opened a new three-star hotel. We understand that there is a section 35 AD is there, which says that if you are into such kind of business, these 14 types of businesses, one of them is a two-star or above category hotel, then you can get a deduction of section 35 AD. But please remember that 35 AD deduction is available only to that person who is following optional tax regime. If you are following new tax regime, default tax regime, then 35 AD deduction is not available to you. Okay. He incurred capital expenditure of rupees 50 lakh on land in the month of March 2023. Okay, he has incurred capital expenditure. 35 AD, we understand this is for capital expenditure. But three types of capital expenditure is not allowed. One is land. If the assessee has made a capital expenditure on land, goodwill or financial instruments. I'm again repeating, land, goodwill and financial instruments are not eligible to get the deduction of 35 AD, except that if the person is spending on their capital expenditure, they are allowed to get the deduction also. Even if they have incurred those expenditure before the commencement of business and if they capitalize that particular expenditure in their books also, then also it is allowed. But if it is on land, goodwill and financial instruments, simply no, we are not going to give the deduction. Okay. So here it is mentioned that in the month of March 23, that is last year, that is prior to commencement, because they have commenced their operation from 1st of April 2023. That is previous year 23-24, they have commenced the operation. But this expenditure they have incurred before commencement, that is pre-commencement expenses. They could be allowed, but this was of land. That is the reason we are not going to allow it. If it would have been building, machinery or any other capital expenditure, then we would have allowed it. But for this 50 lakh, because this is related to land, we are not going to allow it. Got it? Okay. Here they are saying this is exclusively for this business purpose and capitalize the same in the books of account. They have also capitalized it in the books of accounts, but we are sorry, we are not going to allow it because this is related to land. Okay. Further, during the previous year 23-24, he incurred capital expenditure of rupees 2 crore, out of which 50 lakh was for acquisition of land and 1.5 crore was for the acquisition of building. Okay. So during this year, this assessee has spent 2 crore rupees more. So in that case, will he be eligible to get this 35 AD deduction? We understand on land we are not going to allow. So on 50 lakh we are not going to allow this deduction. But yes, on 1.5 lakh, 1.5 crores, which is related to that building, we can allow the deduction. Okay, so 1.5 crore we can allow. And do you know that if there is a loss in specified business, it can only be set off from other specified business. We have 14 types of businesses, so it can be set off among themselves. It says, the payment is in respect of the above expenditure were made by account paycheck. Okay, it's fine because this person has made through account paycheck. Because if this person would have made it through cash, then we are not going to allow it. Okay. Next it says, The profit from the business of running this hotel before claiming deduction under section 35 AD for assessment year 24-25 is 85 lakh. So he has profit of 85 lakh from this business before this deduction. So after this deduction of 1.5 crore, it would be a loss. Okay. He has employed 220. I'm telling you, whenever you will attempt these types of question in your examination, what should be the approach? First of all, because right now I'm for making this lecture, I'm just discussing with you, because right now my objective is to solve this paper also, and also to discuss the provisions. But in your examination, when you are solving this particular question in your examination, I will highly advise you that first of all, just read whatever is mentioned there in the question. If this is a case scenario question, first of all, just give a plain, simple reading of this case scenario. Do not calculate anything, because as of now, you have not even read the questions, what the examiner is asking, right? So, first of all, just give a plain reading to it. Just read it once and then look at your questions, that what this examiner is asking from you, right? So, right now, I would like to make you understand. That's the reason I am just pausing in between and I am explaining some related concepts with you. But in your examination, what should be your approach? First, read those case scenario and straight away jump to the questions and then decide what the examiner is asking from you, right? Okay. Now, the second point is here it is mentioned that he has employed 220 new employees during the previous year 23-24, the details of whom are as follows. So he has employed some 220 employees. The details are here. Date of employment of these employees, whether they are regular employees or casual employees, it is also given. What is the monthly emoluments, that is the monthly salary or wages which you are giving to them, is also mentioned over here. So by reading this, I can understand that they are referring to section 80 JJAA, which is related to new workmen. We understand that this deduction section of 35, sorry, section JJAA can be given to those assessee who are required to get their accounts audited. So those assessee who are required to get their accounts audited, 80 JJAA can be availed by them. How much is the deduction? Whatever is the amount of the new workmen which they are paying as salary or wages, we can give 30% of this deduction, right? And this 30% is allowed for 3 consecutive years, provided they should be your regular workmen. They should not be casual. So for if there is any casual workmen over there, we are not going to give them deduction. Second thing is that these persons should be employed for minimum period of 240 days. Minimum period of 240 days. And in case of that leather, footwear, apparel business, it should be 150 days. Do you remember that provision also? So these people, those who are the new employees which are employed during the year, they should also contribute to recognized provident fund. That is, if all these conditions are satisfied, then we can give them 80 JJAA also. So as of now, I'm not computing the amount which we have to give, but yes, this particular question is also referring to section 80 JJAA. Okay. Now it is mentioned all regular employees participate in the RPF. They also participate in RPF. This is one of the condition of 80 JJAA. And their emoluments are paid by account paycheck. Good. His gross revenue from the hotel is 11 crores. See why they have given the gross revenue. Gross revenue means the turnover is 11 crores. Because by reading this particular line, we came to know that this person is liable to get their accounts audited, because if their turnover is more than 1 crore, then audit is required. So this person is eligible to get the deduction of 80 JJAA also. Okay. But right now I'm not calculating it. It depends upon the question. If they will ask, then I'll be going to I'll be calculating that also. Mr. Kamal has opted out of the default tax regime under 115 BAC. Very good. Because if this person is opting for 115 BAC, then section 35 AD deduction would be applied to this person, because now right now this person has opted out. That is the reason this person is following optional tax regime. So we can give them 35 AD deduction as well, right? Kamal also has another existing business of running a 4-star hotel. Okay, so this person has another business also, which is a 4-star hotel, again a kind of specified business, which was commenced its operation 20 years back, the profits from which are 140 lakh for the assessment year 24-25. So he has another specified business where the profit is 140 lakh. Based on the facts, now we have read what is the case given to us. Based on the facts of the case scenario given above, choose the most appropriate answer to the following questions. Now we are jumping on the questions. First question is asking, assuming that Mr. Kamal has fulfilled all the conditions specified to claim deduction under Section 35AD. If this person has fulfilled all the conditions which are mentioned under Section 35AD and has not claimed any deduction under Chapter 6A under the heading C, deduction in respect of certain income, what would be the quantum of deduction under Section 35AD which he is eligible to claim deduction for assessment year 24-25? Very easy. So this here, what the question is asking, they are just asking that what is the deduction available if this person has satisfied all the condition of 35AD. So how much deduction which we can give in section 35AD. So we understand that this person has incurred some pre-commencement expenses, but they were related to land. We are not going to allow it. Post commencement, this person has again incurred some capital expenditure, but some of that was related to land and other was related to building. So only the expenses which are related to building, we can give that deduction. So how much it was? 1.5 crore it was. Here it was mentioned that during this year, he has incurred 2 crores, out of which 50 lakh was related to acquisition of land. 50 lakh we are not going to allow it, but 1.5 crore which is related to acquisition of building, we can allow that expense. So 35 AD deduction would be 1.5 crore, that is 150 lakh. So here we can say this is the correct answer. 150 lakh would be the deduction allowed. Correct? Second question says, what would be the income chargeable or loss under the head PGBP of the business for the assessment year 24-25 in the hands of Mr. Kamal? Now you have to calculate his PGBP income. Okay. Now we understand that there are two businesses. One is a 3-star hotel, one is a 4-star hotel. So from 3-star hotel, this is the hotel which this person has commenced the business in this year itself. We have profits coming of 85 lakh. So we have from this business, we have profits of 85 lakh. And there is a deduction of 35 AD which we would be giving to this particular person. How much? 150 lakh we have just calculated. So it would be 150 minus 85, 65 lakh. So 65 lakh is a loss from this hotel. 65 lakh is a loss from this hotel. This is PGBP, but we have another PGBP, which business? He has another business of 4-star hotel from where this person is earning 140 lakh. So this is also a specified business, and the loss of that business of 65 lakh can be set off from this particular business. So 140 lakh is a profit from this business, and 65 lakh was the loss. That loss can be set off from any of the specified business. So we are now setting it off from here. So it would be 75 lakh would be his PGBP income. So this is a PGBP income of 75 lakh. So this deduction is 75 lakh would be the PGBP income. So you can mark the answer as A. Right? Would Mr. Kamal be eligible for deduction under section 80JJAA in assessment year 24-25? If so, what is the quantum of deduction? So whether he is eligible for deduction under section 80JJAA, the answer is he is actually not eligible. Why he is not eligible? Because there is a provision of section 35AD. There is a provision in section 35AD. If you are claiming deduction of section 35AD, you cannot claim any deduction of chapter 6A, which is mentioned in heading C. So in heading C, we have certain sections of chapter 6A, which are those sections. These sections start from 80IA to 80 RRB. Although most of the sections were not there in our syllabus, we have 80 QQB, we have 80 RRB, and we have only 80 JJA in this particular heading C. So yes, if this person can claim 80 JJAA, 80 QQB, RRB, the answer is no. Why? Because if this person is claiming deduction under section 35AD, so he cannot claim deduction of that particular heading. So in this case, although they have given us so much things, they have given us so many things. They have given us the date of employment also, how much amount they are paying, not more than 25,000 also. So can we give 80 double J double A to this particular person? The answer could be yes, we could give. But if this person is already claiming 35 AD, then we cannot give deduction. So the answer here is this person is not eligible. No, he would not be eligible. Why? Sorry. Why he is not eligible? Because he is already claiming deduction under section 35 AD. That is the reason this person is not eligible for 80 double J double A, right? So this was a tricky question. If this person would have been eligible, then how much would be? Let's discuss 80 double J double A also. So here I'll say that this person is not eligible for deduction under section 80 double J double A, right? Although institute has not given us the answers yet, but still this person is not eligible, because I am taking a view that this person is already taking deduction of section 35 AD. That is the reason he is not eligible. Otherwise, if he is not taking deduction of section 35 AD, then he would can claim deduction under section 80 double J double A. But right now I am taking a view, I am taking an assumption that this person is taking deduction of 35 AD, correct? Okay, let us calculate the deduction also. Although I have already marked that he is not eligible, but let's say if we are supposed to calculate the deduction of 80 double J double A, then what would that amount be? So we understand these are casual employees. These are casual employees. For casual employees, we cannot give any deduction. So I'm not going to give deduction to the casual employees. We can only give to regular employees. Second thing is that regular employees must be employed in this year at least for 240 days. So now we have to calculate whether they are appointed for more than 240 or less than 240. So it should be minimum 240. So these 40 employees were employed from 1st of June 2023. 1st of June means uh, in April and May they were not appointed, but from June they were appointed. That is 10 months. So if I calculate 10 months roughly, so every month has almost 30 days. So 30 into 10, this is 300 days. So yes, they are satisfying the condition of 240 days because it is coming roughly of 300 days. Here we can give deduction to them also, because second point is that their monthly emoluments, their monthly salary or wages should not be more than 25,000. Up to 25,000, it's okay with us. But if it is more than 25,000, we are not going to allow deduction. So here the deduction is the amount which we are giving to them is not more than 25,000. They are eligible. Second, 80 employees are regular employees. Total amount which we are paying to them per month is also not more than 25,000. And here they are employed from July onwards. So if I calculate the number of days, it would be from July till March, it would be 9 months. So roughly if I'll calculate 9 months into 30 days, so it would be roughly 270 days. Yes, they are also satisfying. So these two are satisfying. Last one, third, they are employed from 1st September. So if I calculate the number of months from September onwards, it will be 7 months, right? 7 months, let me assume it for 30 days in each month. So it would be 210 days. So here our employees were regular. They were appointed and we are giving them 25,000, not more than 25,000, but they were employed for less than 240 days. So it will not be allowed. This will not be allowed, right? So we can give deduction to them. But right now in this question, we are not going to give deduction. This is right now I'm just explaining you 80 double J double A. If you would like to calculate the deduction, how much it would be. So here you will calculate for this how much you will calculate 24,000 per month into how many employees were there, 40 employees for 1 month, and how much for how many months we have paid it, for 10 months we have paid it. Okay, so 24,000 is the monthly emoluments. How many employees were there, 40 into 10 months. So whatever is the amount you will get, you have to multiply it by 30%. So this deduction you can give. And also to second one, that is 24,500 into how many employees were there, 80, and for how many months, from July onwards, if you will calculate it is 9 months. So this amount into 30%. Just add these two, you will get the deduction. But in this question, we are not going to give the deduction. Why? Because this person is opting for section 35 AD. That is the reason we are not going to give deduction, right? Okay. So here I am presuming that this person is opting for 35 AD. That is the reason this person is not eligible. Otherwise, if he is not opting for 35 AD, he would have been eligible. Okay. Question number 2. Second MCQ, second case. Mr. Arvind, an Indian citizen, wants to file his ROI for the previous year 23-24. Okay, he would like to furnish his ROI. Okay. He required assistance for which he has approached you. He has shared the following details relevant to the previous year 23-24. Okay, so Arvind is an Indian citizen and he would like to furnish ROI. He's giving us some details. Okay. Arvind owned a house property in Bangalore. He has a house property in India and it was rented out for rupees 65,000 per month to Arjun, who is a salaried employee. So Arjun is tenant. So Arjun is a tenant in this particular property and he is getting his salary income. We don't have to calculate income for Arjun. We have to calculate income for Arvind. Arvind is a landlord. How much amount which he is receiving? 65,000 rupees per month rent. Okay, this is house property income. He claims that this was the only income which he earned during the previous year 23-24. Arvind is claiming that I have only house property income. Okay. However, when you had sought for his bank statement, you have asked for his bank statement and you observed the following information additionally. Okay, we have some extra information also. What is that? Let us read it out. So when you were scanning his bank statement, his bank passbook, so you found some details over there. There is a credit of 23,975. So in this his bank account, in Arvind's bank account, there was amount of rupees 23,975. You asked him, what is this? Sir, where have you received this 23,975 rupees? So this person is saying, sir, this is towards my income tax refund. So this is the income tax refund he has received. So tell me, if you income tax is not an expense. Whenever you pay the income tax, it is not an expense. And whenever we receive this income tax back, that is called income tax refund. It is not an income. So it is an income tax refund. So this amount is not an income, right? Because this is income tax refund. But wait, here they are also saying which includes 5775 towards interest on income tax refund. So, sorry, they are saying that there is a credit of 23,975, but out of this amount, 5775 is the interest on income tax refund. Please tell me this is not income tax return. This is not income tax refund. Sorry, this is not income tax refund. This is the interest which you have earned on income tax refund. Is that your income? The answer is yes, very much. This is our income of IFOS. So 5775. So this person has house property also, and this 5775 is the IFOS income also. Got it? Okay. On 15th August 2023, the bank statement showed a credit of 55,000. Now you are asking him, sir, where is this 55,000 came from? So tell us the story about this. What is this 55,000? You have this in your credit. You have this in your bank account. He is explaining now, which he claimed to have received as a gift from his grandchildren on his 60th birthday. Okay. See, this one liner, this small line is giving us so many information. So much of information this line is giving to us. First of all, they have said that he has received on his 60th birthday. This means that assessee is a senior citizen. Got it? So this indicates that assessee is a senior citizen. Second thing is that he has received from his grandchildren. Lineal ascendant, linear descendant. Do you remember that? So if we receive such amounts, such gifts from our relatives, and relatives here includes in IFOS, please remember that chapter. IFOS includes, relatives includes your grandchildren also, because they are linear descendants. So if you receive anything, if the individual receives anything from their linear descendants, grandchildren also, that is not taxable. So 55,000, don't worry, you are not going to tax this amount. So 55,000 is not the income. Okay. So IFOS is only 5775. 55,000 he's receiving from his relatives. That is completely exempt. Okay. But this information on his 60th birthday is indicating that assessee is a senior citizen. On further assessment, you were able to understand that Arvind and his wife had traveled to Mauritius. Okay. They have foreign travel also during previous year 23-24 to spend some time with their son who is staying in Mauritius. Okay. So Arvind and his wife been to Mauritius also this year to visit his son. And son stays in Mauritius. On scrutiny of their passport and relevant documents, you conclude that they had left India on 27th. Okay, now they are asking about something about residential status also. They have started that information. So you on when you have asked for their passport, please tell me for how many days you were in India, how many days you are outside India. So now you are seeing his passport also. So from the passport, you got the information that he left India on 27th September. 27th September, he left India and he's going to Mauritius. And he returned back on 31st March 2024. 31st March 2024 is the last day for this year, right? So he came back on last day and he left on 27th September. You understand, in residential status we have done that the day on which the departure date as well as the arrival date both are counted and they are taken as stay in India, right? So 27th September and 31st March will be included. Between these dates you will not include that because that in between these dates he was outside India, but he was in India on 27th September. He was in India on 31st March. You will include this date. Let us see what type of question they will ask. Then we will decide. During the 4 years preceding the previous year, okay, they are giving us the information of last 4 years also. That is also relevant for us to calculate the residential status, to determine the residential status. During the 4 years preceding the previous year, 23-24, both had stayed in India for 320 days. They both were in India in those 4 years only for 320 days. Okay. Prior to that, they had been staying only in India. Prior to those 4 years, they were in India, but in last 4 years, they were in India just for 320 days. It is 320 days per year, each year, or the total of the 4 years is 320. Sir, here each year is not mentioned. So it means during the 4 years, the total stay was total, it was just 320. Okay. Now, based on the facts of the case scenario given above, choose the most appropriate answer to the following question. Interesting case study. Okay. What is the residential status of Mr. Arvind for the previous year 23-24? So they are asking us about what is the residential status for Arvind for previous year 23-24. So first of all, we have to determine whether this person is a resident or non-resident. And if this person is a resident, then we will further determine whether this person is an ordinary resident or a non-ordinary resident. Got it? Good question. Okay, easy also, right? So first of all, he is in India. Let us first calculate the stay during previous year 23-24. So he left for Mauritius in the month of September. So he was there in the month of April, May, June. He was there. So let us calculate the number of days. He was there in India in April 23, right? He went outside in the month of September. April 23, he was here. April has 30 days. Okay. May 23, he was here. May has 31 days. He was here in India. June 23, 30 days. July 23, 31 days. August 23, he was here. Yes, he was very much here. August has 31 days. September, he was here. And he left on 27th September. So for how many days he is in India? 26 or 27? 27. Because the day when this person is going outside India, that day will also be included. So in September, he was here for 27 days. October, November, December, January, February, he was not here. But he came back in the month of March. And for March, he came back on the last day. That is 31st March. We will include that day also. So in the month of March 24, he was here just for 1 day. So just calculate the number of days. So this is 30 plus 31 plus 30 plus 31 plus 31, 27 plus 1. Calculate just how many days are there. 1, 2, 3, 4, 5, 6. It is coming 181 days, guys. Right? 181 days. So this is 30, 30, 30, 30, 30, 30. I'm calculating it. The 3 days short, I moved it from here. This is just calculations, right? So he was here in for 181 days. So this person was not here in India for 182 days. My first condition is not satisfied. Basic condition, first condition says that he should be in India for 182 days. This is not satisfied. Let us check the second condition also. Second condition says that the assessee must be in India during the previous year for at least 60 days. Okay, 60 days he was there. He was there for 181 days. But it also says, second condition says that that person should be in India for 60 days. But in the past 4 years, he should be for 365 days. But in the past 4 years, he was just 320. So my second condition is also not getting satisfied. My second condition is also not getting satisfied. I will say that this person is a non-resident. This person is a non-resident. Okay, but just hold on. We have, let me revise that, make you revise that concept also. So if this person income from other than foreign sources would have been, let's say, more than 15 lakh, then in that case we see 120 days condition also. 120 days condition and during the previous year, and last 4 years is 365. So anyways, this person is not satisfying 365 days condition. So that point is also not that relevant. So that point is also not relevant. So this person is not satisfying any of the basic condition. So this person would be a non-resident. So what is the residential of status of Mr. Arvind? He would be a non-resident. My answer is C. Got it? Simple. Okay. Let's come to the next question. Next question says, is there any requirement to deduct tax at source? And very nice question. Now they have asking the question of TDS also. Once in the first part, they have asked the question for residential status, and now they're asking for the question of TDS. Is there any requirement to deduct tax at source under section 194 IB on such rent by Mr. Arjun? If yes, what would be the amount of TDS to be deducted? Okay. They are asking 194 IB. Sir, we don't remember what is 194 IB. No problem, guys. See, this is very natural. This is completely normal if you don't remember this provision. But the thing is that you should keep on revising, keep on practicing, right? Just keep on practicing. It will happen. It will happen because as these exams are approaching, it will happen that many times, even during the day, also many times you will feel you will go in the position of self-doubting yourself. So my friends have done so much. I have not done even this chapter. I have not done that chapter. I'm forgetting what I have learned last week. I've almost forget that. That is something which is very normal. It is very natural, and it happens with everyone. In this course, I'm giving you just one mantra. Please remember. Please take my experience. I'm giving you this by my experience, and even everybody can say this to you. See, in this course, what you have to do is you just simply keep on revising, keep on working hard, keep on working hard. Just focus on your studies. Don't let these things capture you. Don't let these things come into your mind that I have not done this, I have not done this. It will happen. It will happen. Even it will happen once you will pass your intermediate examinations. If you will, when you will be in final, then also it will happen. Once you are chartered accountant, also there are so many things that will happen. This self doubt will keep on coming. Don't worry about it. Don't worry about it. Your main focus should be you just because now exams are approaching, so your focus should be just keep on studying, just keep on studying, nothing else, nothing else. These thoughts will come, let it be, let them come, right? But please don't distract from your track, right? Just be on your track, just be focused. You have to be consistent in your studies. Just give your plan your day accordingly. Give that 10 hours, 12 hours, whatever you have planned, give that particular time to your studies. Keep on working, keep on doing. Just don't give any attention to these types of thoughts. That is not required, right? Okay, come back. So what is 194 IB? I'll make you revise. Section 194 IB says, if section, first of all, understand what is section 194I, then I'll discuss what is 194 IB. So 194I says, if you are paying rent of more than 2,40,000 in a year, then you have to deduct TDS at a rate of 10%. For building, for furniture, etc., 10%. For machinery, it is 2%. So for 194I says, if you are a company, you are paying your business rent. If you are a partnership firm, you are paying rent. Even if you are individual, if you are Who is individual? The tenant. The tenant is individual or HUF. If you are required to get your accounts audited in the last year, then you have to deduct TDS. But here my tenant was Arjun, who was a salaried assessee. We have just read that particular portion that Arjun is a salaried assessee and he is paying rent. So 194I is not applicable on Arjun because this person is not carrying any business or profession, right? So 194I is for those individual and HF only who are required to get their accounts audited in the last year. So here Arjun is not having any business income. He was just a salaried assessee. So he cannot deduct TDS under section 194I. Okay. Now we have another section 194IB. 194IB says that if you are not covered under 194I, yes, Arjun is not covered under 194I, the tenant is not covered under 194I, and if you are paying rent which is more than 50,000 rupees, which is more than 50,000 rupees, the per month rent or the part of the month rent is more than 50,000 rupees, then you should deduct TDS at a rate of 5%. Then you should deduct TDS at a rate of 5%, right? So here, Arjun is paying rent. How much was the rent? 65,000, I think. So it is more than 650,000. So he should deduct TDS at a rate of 5%. But please remember in 194 IB, it is also mentioned that your landlord, the person to whom you are paying this rent, that person should be a resident. That person should be a resident. So now this particular Arjun, he's a tenant in our building and he's paying a rent to Arvind, who is a non-resident. 194 IB provisions will not apply. 194 IB provisions are not apply. I'm telling you, most of the students might be able to recall this particular provisions, but most of the students, majority, would not be able to recall this particular provision. It is completely fine. This is the way to practice your income tax. How? These questions will help you. These questions, when you will practice these types of questions, when you practice your questions, you practice your past year questions, you practice your MTPs, RTPs, etc., you are able to recall that particular provisions. And when you fit that particular provision with this question, you'll be able to retain it for a very long period of time. So now I have discussed this 194 IB with you, right? Now, even if someone will ask you after 6 months, 9 months, 1 year also, you will be able to answer that 194 IB is only applicable if the person to whom you are paying, that person is a resident, right? So here 194 IB will not apply. If this Arvind would have been a resident, then we can deduct 5% TDS, right? But here we are not going to deduct anything. So there is no requirement to deduct TDS under section 194AB since Mr. Arjun is a salaried assessee. No, salaried assessee is not the correct answer. Arjun is a salaried assessee, he can deduct. But the thing is that you are not deducting TDS because the person who is receiving, Arvind, is a non-resident, right? So this answer, no, is correct, but this explanation is not correct. So we have D where no is written, okay. There is no requirement to deduct tax at source under section 194 IB since Mr. Arvind is a non-resident. This is correct answer. This is the correct explanation, right? Because this is the answer is here also it is no, here also it is no. No is the correct answer. But with first option, this explanation is not correct. Explanation, this one is correct because Arvind, the landlord to whom we are paying this amount, the house owner, that person is a non-resident. That is the reason we are not deducting TDS, right? Okay, tell me. So this here the answer is point number D. Let us assume just for knowledge purpose, let us assume that if Arvind would have been resident, then if this house owner would have been resident, then we will apply TDS. How much TDS? Sir, 5%. Tell me how much is the rent? 65,000 per month. For entire year, how much it would be? 65,000 into 12. 65,000 into 12. That is 7,80,000 rent Arjun is paying. And at the end of the year, how much TDS he should deduct? 5%. So how much is 5% into 5%? 39,000. In that case, if this Arvind, this owner, would have been resident, then 39,000 would have been answered. This answer would be correct. But here we are not going to deduct TDS. Why? Because this person is a non-resident. Got it? Okay. Third question. Third question says, which of the following statements is correct with respect to advanced tax liability? Okay, now they have given us the question on advanced tax. Which of the following statement is correct with respect to advanced tax liability of Arvind for previous year 23-24? Advanced tax liability shall not arise to Arvind since he is a non-resident. No, this is not a correct answer. Why? Because if a person is resident or that person is non-resident also, then that person should pay advance tax. When if their tax amount, if their tax payable is 10,000 or more, they are supposed to pay advance tax. It is not relevant whether that person is a resident, whether that person is a non-resident, they have to pay advance tax, provided their tax payable is 10,000 or more. 10,000 also, if it is exact 10,000 also, then also advance tax liability occurs, right? Arises. So in this case, advance tax liability shall not arise because Arvind is the non-resident. No. Non-resident, whether he is resident, non-resident, that is irrelevant. First answer is not correct. Advance tax liability shall not arise since Arvind is a resident senior citizen and he has no income under the head PGBP. First of all, Arvind is not resident. Second thing, we remember that in advance tax, any person whose tax is 10,000 or more, that person is supposed to pay their advance tax liability also. But we also understand if that person is a senior citizen plus resident. This is a thumb rule, guys. If any in Income Tax Act, whenever this benefit of senior citizen is given, whenever in any of the provision, it should only be to resident. It should not be a non-resident. So if non-resident is a senior citizen, there is no benefit in Income Tax Act. The only benefit is given to those senior citizen or those super senior citizen who are resident, right? So we understand that in advanced tax, we know that we give relaxation to those senior citizens who are resident, and if they do not have income from PGBP, then they are relaxed from advanced tax provisions. So here, this says that advanced tax liability shall not arise because Arvind is a resident. No, Arvind is not a resident, so this option is also not correct. So these two options are not correct. Third option says advanced tax liability shall arise since he is non-resident. No. See, if non-resident has his taxes coming to, let's say, rupees 2,000, so is he liable to pay? If there is any non-resident whose tax liability is just 2,000, is he required to pay advance tax? The answer is no. The criteria is at least your tax should be 10,000 or more. So here it is written advance tax liability will arise only. They have just given this particular statement. Here is a full stop here. Since he is a non-resident. Since he is a non-resident, advance tax liability can arise? No. Provided the tax payable should be at least 10,000 or more. So this is also not correct. Advance tax liability shall arise since his tax liability is not less than 10,000. So this is the correct answer. Advance tax liability here it will arise because the tax liability is not less than 10,000. It is 10,000 or more. Let us calculate the tax liability also. Confirm this answer, although this answer is correct. Just to confirm this answer, let us calculate the tax liability. Okay. So first he is getting house property income. Second, he is getting IFOS income. How much is the house property income? So the rent is 65,000 rupees. Okay. See, house property income, we understand. We will calculate it roughly because this is MCQ. Rent is 65,000 rupees per month. So into 12, I'm assuming it is let out for entire 12 months. So 65,000 into 12, it makes 7,80,000. Correct? 7,80,000 is the rent. We understand that first we have to calculate GAV. So GAV is actual rent or expected rent. So in expected rent, we need a fair rental value. We need standard rent and all municipal valuation. That is not mentioned. So we ignore that expected rent portion. So here the GAV is 7,80,000. Minus municipal taxes paid. There are no municipal taxes. So this minus 0, it will become NAV. So this GAV itself will become NAV now. 7,80,000. We understand in house property, we will give that person 30% standard deduction. So 30% deduction will be allowed under section 24A. 24B is interest on borrowing. Interest on borrowing is not there in this question. So 30% deduction we will allow. So out of 7,80,000, you will give 30% deduction. That is 2,34,000. And the remaining amount would be 5,46,000. So 5,46,000 is his house property income. Correct. This is his house property income. Plus he has IFOS income also. How much is the IFOS income? 5,775. So 5,775 is the IFOS income. Make the total 5,46,000 plus 5,775. So this is total income comes to, let's say there is no chapter 6A and all. So the total income comes to 5,51,775. If I'll round this off to the nearest 10, it will be 5,51,780. Got it? Income is rounded off to the nearest 10 to calculate the tax. Now you have to calculate the tax. First of all, which regime you will follow. So if you will read this question, so in this question, there is nothing mentioned about the regime which this person is following, whether this person is following default tax regime or this person is following optional tax regime. So if it is nothing is mentioned in the question, we will follow default tax regime. So if nothing is mentioned, because it is by default, we will follow default tax regime. So his tax liability would be zero. Why? Sir, it is not more than 7 lakh. So we understand that in default tax regime, there is a rebate available on 7 lakh. But please mind it, it is only for resident individuals. So here the RSSE is a non-resident. So rebate will not be available. So this person is a senior citizen. Come on. In default tax regime, there is no such thing like senior citizen and all for calculating the slab rates. So it is fixed for everyone 3 lakh, right? So on this amount, calculate the tax. We just would like to calculate whether it would be 10,000 rupees or more, or it would be less than that, right? You don't have to calculate the exact tax. You just have to determine whether it is less than 10,000 or 10,000 or more. So we understand on first 3 lakh, it would be nil. On next 3 lakh, but it is just 551,780. So on first 3 lakh, it would be nil. On next amount, that is 2,51,780. It would be 5%. How much it will be? 2,51,780. 5%. It would be 12,589. Plus, you have to calculate cess also. But there is no requirement to calculate the tax because now my motive is over, because my motive was whether to determine that this amount, this tax payable amount is more than 10,000 or not. So it is more than 10,000 rupees over here. So even if would have been 10,000 also, then also advanced tax liability arises. So I can now firmly say that this answer is my correct answer. Why? Advanced tax liability will arise because the tax liability is not less than 10,000. It is 10,000 or more. That is the reason we are going to apply this particular provision, right? So this answer is the correct answer. Got it? Let me repeat it once again. Advanced tax liability shall not arise because Arvind is a non-resident. No, it does not depend upon resident or non-resident. Advanced tax liability is on all person, provided their tax payable amount should be 10,000 or more. Second says that assessee is a resident. So no, assessee is a non-resident. That is the reason second is incorrect. Third is, it was saying that advanced tax liability arises since he is a non-resident. No, we cannot catch hold any of the non-resident and we will say that you have to pay advanced tax. Boss, why? That person should pay advanced tax only when his tax payable should be 10,000 or more. So this is also not a complete answer. This is the complete answer. Advanced tax liability will arise because reason is the tax liability should not be less than 10,000. So this is the correct answer, right? So this is our MCQ. Now come to next MCQ. Third. Are you all getting this? Enjoying with me? Also, I would like you to calculate with me, right? So as of now, we are discussing MCQs. Once I'll be starting with my descriptive part, I would like you to, first we will discuss, then I would ask you to write your answers, to please solve your answer. Then you can check from my answer, right? First discuss this MCQ. Roshni Limited has 2 units. One unit in SEZ and other unit it is in DTA. I understand they are referring to section 10AA, right? Okay. So Roshni Limited is the company. They have 2 units, one in SEZ and other one is in DTA. And you understand, if you are calculating deduction under section 10AA, you just have to concentrate on SEZ values, right? For DTA, if they are mentioning it, DTA, you can keep it, but you don't require it. If you would like to give deduction, then only SEZ values are required. Okay. The unit in SEZ was set up and started manufacturing from 12/5/2014, and the unit in DTA from 15/6/2017. The unit of DTA when it was set up, that is not relevant. I am concerned with this particular date. This is the date when my SEZ unit was set up. Okay. Just to refresh the provisions of section 10AA, we understand that section 10AA deduction is available. It's a tax holiday, is available to the assessee for 15 years. But this 15 years period is divided into three parts. For first 5 years, we get 100% deduction. We get 100% deduction. Whatever is the profit related to, please mind my words, whatever is the profit which is related to export, only for SEZ, If SEZ profits are related to export, then 100% deduction can be allowed of that profit. For next 5 years, it is 50%. It is not 100%, it is 50%. And for remaining 5 years, it is 50% of the profits or 50% amount which is transferred to reserve, whichever is lower amount. So 50% of the profits or the amount transferred to reserve, whichever is lower, that is for next 5 years. So first 5, second 5. First 5 and second 5 generally comes in examination. So in examination, they normally don't ask for this last 5 years. They ask only for either for first 5 or for next 5. So here, which particular period this question is falling? So this person has commenced their operation in previous year 2014-15, right? So this person has commenced, this company has commenced their operation in previous year 2014-15. And right now we are in previous year 23-24. Tell me, which year is it? If you calculate, 14-15 is first year, 15-16 is second year, 16-17 is third year. So if you calculate, then you will find that 23-24 is the 10th year. It is the 10th year, right? So we now understand that we are going to give him a deduction. This company, this is not our individual assessment, this is a company. So we are going to give them deduction of 50% of the profit which is related to their SEZ unit, and that should be in proportion to the export sales, right? I'll make you understand also that one, because 10AA is something which is always a examiner's favorite. They do ask question on this particular section. Okay. Now, further information they are giving to us is total turnover of Roshni Limited and unit in DTA is 12.5 crores and 4.5 crores respectively. Okay. So they have given the total turnover of the company. Roshni's Limited turnover, that is for the company's turnover, is 12.5 and DTA turnover is 4.5. We can easily calculate how much is the turnover for SEZ, because they have given us the total turnover and DTA turnover. We can easily calculate how much is the turnover for SEZ. So if I'll write it over here, so turnover of the total company was 12.5 crores, right? And for DTA was how much? 4.5 crores. So I can easily calculate the balancing figure. 12.5 minus 4.5. So the SEZ turnover is 8 crores, right? I have simply calculated this minus this. This is the 8 crore amount which I have received for SEZ unit. This is the turnover. Is this the deduction? No, guys. This is the turnover. Second thing is that export sales of SEZ and DTA is 3.5 crores and 2.25 crores respectively. Guys, I'm least concerned with DDTS figures. I'm only concerned with SEZ figure. So they are asking me, let me read the question also. What they are asking me: Roshni Limited would be eligible for deduction under section 10AA. They are asking us the deduction of section 10AA. So I am least concerned. This is MCQ, right? So I have to solve this quickly in my examination. So if first of all understand what the question is demanding from you. So here the question is asking about the deduction of 10AA. So I am least bothered with DTS figure. I am only concerned with SEZ figures. So export sales of DTA, I am least bothered. I need to consider the export sales of SEZ unit is 3.5 crores. So the total turnover was 8 crore, but was related to export. How much was related to export? It was 3.5 crores. Okay, for SEZ. So I'm not writing over here. I can write 2.25 crore over here also, but that is simply a waste of time. So I'm not writing it over here. Okay. Net profit of unit of SEZ and DTA is 95 lakh and 80 lakh respectively. DTA least bothered. I'm only concerned with SEZ profit. So SEZ profit is 95 lakh. So the profit of SEZ is 95 lakh. Okay. Then they have mentioned out of the export sales of 3.5 crores. Okay. This amount out of this sales, 2 crore has been received in convertible foreign exchange of 39/2024. Very nice. They have given all the things which are there in section 10AA. They have given us everything in this question. Very good question. Okay. Let us keep this value aside. Keep this value aside. First of all, if this particular line would not have been there in this question, how you will solve it? How you will solve it if this line would not have been there? Simply you understand. First of all, whatever is the profit which SEZ has earned, profit is 95 lakh. You have to calculate the proportion which is related to export, which is just related to export. So this 95 lakh is the profit on how much turnover? 8 crores turnover. So how much was export? 3.5 crores. So if this line would not have been there, if this particular thing which is related to foreign currency which is received in up to 30th of September 2024, if this line would not have been there, I have simply calculated the profit, the deduction under section 10AA would have been, first you will calculate what is the profit of SEZ. Profit of SEZ into, you have to take the proportionate amount. How much proportion? Whatever is the export sale of SEZ, export sale of SEZ. Do you remember this formula? It's a very easy formula. First of all, and it is very easy to remember also. First of all, please make yourself understand that this section 10AA deduction is only related to SEZ. It is not related to DTA, right? So whatever is the profit of SEZ, you can give that deduction only. Second thing, it should be related to export, not for domestic sale. It should be related to your export. So the profit of 95 lakh is coming from the turnover of 8 crores. But out of this 8 crore, the export sale was only 3.5. So you have to calculate how much is the profit which is related to this particular turnover. Simply we can say, by simply proportionating it, we can say profit of SEZ into export sale of SEZ upon total turnover. Total turnover of SEZ. So I can simply say that the profit of SEZ is 95 lakh. Export turnover is 3.5 crores. Total turnover is 8 crores. And if this would have been first 5 years, I would have done it 100%. But this is 10th year. That is next 5 years period. So I'll not do it 100%. I'll do it 50%. So here I will do it 50%. So whatever is the amount which will be coming after this calculation, that would be my answer. If that 2 crore amount would not have been mentioned over there. So this would have been your answer if that 2 crore thing was not mentioned in the question. But now that 2 crore thing is also mentioned. So here, what now you have to do is that, let me consider this also. So he's saying, this question is saying that out of 3.5 crore, that is the turnover related to export sales, we have received only 2 crores have been received in convertible foreign exchange up to 30th of September 2024. Now we know in section 10AA, there is a provision, it is mentioned over there, that we will consider only that export sales. We will consider, please mark my words, we will going to consider only that export sales which you have received in foreign currency within the period of 6 months from the end of the previous year. From the end of the previous year, whatever you have received within 6 months or some extended period which is extended by RBI. So here nothing is mentioned about the extended period. So we will take only that export sale which is received in foreign currency within 6 months. So you understand your previous year is getting over on 31st March 2024. So if you add 6 months over here, you will get 30th of September 2024. That is the reason they have given this date. So this is date is nothing but 6 months after the previous year. Okay. And you have received only 2 crores out of, although you have made an export sales of 3.5 crore, but you have received only 2 crores as foreign currency. So we will assume that your export turnover is not 3.5, it is just 2 crores. It is just 2 crores. So my formula will change over here. So export sales, although it was 3.5, but we will take only that amount which is received in foreign currency within 6 months or such extended period. So I'll not take 3.5, I'll take 2 crores over here. I'll cut 3.5. Let me erase this and I'll take 2 crores. Right now, calculate how much it would be. So this is 2 crores by 8 crores. So 2 crores, you will put some zeros, you will put some zeros over here. No need to put the zero. This is crore cancel 2 by 8. Simply keep it 2 by 8. So in my calculator, just I am doing 2 divided by 8 first, but then I'll multiply it by 95 lakh, then 15%. So I'm just writing 2. I'm not writing 2 crores, then I'll be dividing it by 8 crores. Simply it is a wastage of time. I'll simply say 2 by 8. Simple mathematics. 2 divided by 8 into 95 lakh into 50%. So this would be, why 50%? Because this is the 10th year, right? If this would have been 6th year, 7th year, 8th year, 9th year, 10th year, only 50% would have been allowed. If this would have been first to 5 years, first, second, third, or fourth or fifth, then 100%. Here it is only 50%. So this is 11,87,500. This is the deduction which I'll be getting under section 10AA. So under section 10AA, 11,87,500. This is the correct answer. C is the correct answer. Got it? If you would like to write it down, you can also pause the video here and you can write it down. You can pause the video, write it down. It was a good question. They have given us everything which is related to 10AA. Okay. Okay. Done. I'm erasing this part, right? Because I have to solve question number 4 now. Last question of MCQ, then we'll come to descriptive. What would be the tax liability of Miss Savita, a resident? Savita is a resident, okay, who attained the age of 60 years, senior citizen, resident also. 60 years on 1/4/2024. So she was not 60 years in previous year, but on the first day of the assessment year, she become of 60 years. So we understand we take this date also, we give 1 day extra also. So we will consider her as a senior citizen also because she attained 60 years on 1st of April 2024. You understand this particular concept, right? And the total income is 7,25,000. Okay, we can calculate tax comprising of salary income and interest on FD. So this 725 is a total income. It's a total computed income which comprises of salary income also and FD interest also. And you have to calculate tax under default tax regime under 115 BAC, not under optional scheme, under default tax regime. So you understand under default tax regime there is that, so that for giving that slab rates, so there's 60 years or 80 years senior citizen or super senior citizen, that particular thing becomes irrelevant. So for default tax regime, we have simple one slab rate 0 to 3 lakh is for everyone. Basic exemption limit is 3 lakh for everyone. Then we have 3 to 6, 6 to 9 and so on. So here this assessee has income of 7,25,000 and you have to calculate the tax also. And she is not having any special income. She is not having any LTCJ income, any casual income. This is simply salary income and or fixed deposit amount. Can you give deduction of 80 TTB because she is getting fixed deposit amount also? Can you give a deduction? The answer is no. Why not? Because you are following default tax regime. So if you follow default tax regime, chapter 6A deductions are not available in that case. Only 3 deductions are available. CCD2, CCH2 and 80JJAA. Only 3 deductions are available. Otherwise, no deduction of chapter 6A also. Okay. So there is no deduction of chapter 6A. So this is the total income. You have to calculate the tax on this 7,25,000. So what you will say on first 3 lakh, it would be nil. On next 3 lakh, it will be 5%. Okay. And on remaining amount, next 3 lakh will be 9 lakh. So you don't have to go till 9 lakh. So on next 1.25 lakh, it would be 10%. So here it is nil. 3 lakh into 5% is 15,000. 1.25 lakh into 10% is 12,500. So it is total 27,500 is the tax. You will add 4% cess also. So it will be 27,500 plus 4% cess. After adding cess, it would be 28,600. And my correct answer would be this one. Is that easy? No. Why not? Because we understand that there is a rebate also, because she is the resident individual, and we know that in default tax regime there is a rebate also. Sir, but in default tax regime there is a rebate if the total income does not exceed rupees 7 lakh. If the total income does not exceed rupees 7 lakh, here our income is more than 7 lakh, so there is no question of rebate over here. No, please understand that there is a difference between the old regime rate and this default tax regime rate. There's a difference. Here in default tax regime, it says that if your income is little more than 7 lakh also, little more than 7 lakh also, then also you can apply for rebate. Then also rebate is applicable to you. So how we will calculate the rebate? We will see whether rebate is will be applicable over here or not. Similar concept as we have in marginal relief in surcharge. A similar type of concept is introduced in default tax regime also. It is introduced in default tax regime also in the case of rebate. So here the answer is not 28,600. I think it will be something else. Let us first discuss that answer. So this says if your income is little more than 7 lakh, first of all calculate how much is the extra income over 7 lakh. So first you have to calculate what is the excess income over 7 lakh. So here our income is 7 lakh 25,000. How much is over and above 7 lakh? So 25,000. So this is 25,000 is the extra income over and above 7 lakh. We will call it A. We will just call it A. Second thing is that you have to calculate that how much is the tax coming. How much is your tax on 7.25 lakh without cess, because you apply cess only after giving rebate. So first you will give rebate, then you will apply cess. So how much was tax was coming up on 7.25? I have just erased it. On 3 lakh it was nil. On next 3 lakh it was 5% 15,000, and on next 1.25 lakh it was 12,500. It was coming 27,500, right? Without cess. First of all, without cess. So tax on 7.25 lakh is 27,500. This is B. This is B. So now you will have to determine whether rebate would be allowed here or not. So if this B is more than A, if this B is more than A, then rebate is available. So here my B is more than A, so rebate would be available. How much would be the rebate? B minus A. Whatever is the difference between these two, that would be the rebate. So rebate would be 27,500 minus 25,000. This 2,500 would be the rebate. So my tax was 27,500. Please give a rebate of 2,500. That would be 25,000 would be the tax. Apply cess. Now you can, after giving rebate, you can apply cess of 4%. So if you will apply 4% on 25,000, it would be 1,000. So 26,000 would be the tax liability. So my answer is B. This is the correct answer, right? So first of all, you have to calculate if your income is little more than 7 lakh. So first you have to calculate whatever is the excess amount over 7 lakh. Name it A. Second is that you have to calculate the tax on whatever the amount of income which you have, calculate tax on that. Just first of all, you have to determine whether this amount which you have calculated is tax, which you have named it as B, whether this B is more than A. If it is more than A, then rebate would be available. How much rebate would be available? B minus A, that is 2,500 would be the rebate, and then you can apply your cess. That would be your tax liability. But please understand the logic also. This A minus B, it seems confusing to me always. So I never learn by this technology, by this particular methodology. Sorry, I never learn by this methodology whether what is A, what is B. I simply learn by logic. See, we understand that on 7 lakh, we don't have to pay any tax, because if we are following default tax regime, so if you have income of 7 lakh rupees, so because of rebate, we don't have to pay any tax. So how much income we have earned now? How much we have income earned, which is over and above 7 lakh? So it is 25,000. So I am earning just 25,000 rupees, right? Extra. Otherwise, if my income would have been just 7 lakh, I would not have paid any tax in default tax regime. So I am earning only 25,000 income. And the government is asking me tax of 27,500. That is a hardship to me. Why? Because my income is just increasing by 25,000. I can pay this as a tax. But you are asking me 27,500, sir. That would be a hardship to me. So in that case, that extra amount would be a rebate, right? So that extra amount would be the rebate to you. So 27,500 is was the tax, but we will give you 2,500 rebate in this, the manner which you have calculated. Now you understand with logic, right? So 25,000 is your tax, plus now you will apply your cess. 26,000 would be your tax liability, correct? Okay, now let us come to a descriptive question. So I would request you to please take your calculator, your register, and your pen with you. Now we are going to solve these questions. Give me a moment. So let's start with our descriptive question. So it says part B, this is descriptive question, 35 marks. Question number 1 is compulsory and attempt any 2 questions from the remaining 3 questions. Okay. So it has total 4 questions. One is compulsory. This is a compulsory question. This is generally a full-fledged question that we have to do. And we have question number 2, 3, and 4. And out of these 3 questions, we have to do in our examinations any 2 question. Either you do 2 or 3 or 2 or 4, any 2 which you know the most, right? But for the purpose of this revision, because for the purpose of this lecture, we are doing revision. So I'll be discussing with you all the questions. Question number 2 also, 3 also, and 4 also, right? But in examination, you have to do only 2 out of those 3. Okay. So it says, first question says, Mr. Amit, I understand it's a full-fledged question. It would be a bit tricky also, right? But please don't worry. Please don't think in this way that first we will do the entire revision, then we will solve this question. No, no, don't worry about it. Because this is the best way to solve your, in fact, to revise your concepts. Because when you do your questions and if you stuck somewhere in between, then you refer to that particular section or that particular provision. That way you will be able to retain that particular provision for a very long period of time, and you will understand it thoroughly also. So this is the best way to revise your income tax. So you have to practice as much questions as possible, right? But in that case, if I say that as many questions as possible, I would now say, because examinations are not that far away, so I would recommend that please stick to your ICI module paper illustrations and your the question which are given on the back side of the paper, and also your MTPs and RTPs. That is most important, right? Don't do much questions in that case. You can revise them multiple times. Please increase the revision of those questions, right? Instead of doing so many questions from other from various sources, so it is advisable to stick to ICAI material, MTPs and RTPs, and please revise those questions multiple times. Got it? Okay. Let's start with question number 1, descriptive question. And I'll be discussing, I'll not be, because first of all, I'll be discussing this question with you, then I'll ask you to do the question, then you can refer my solved answer also for this particular question. Okay. So it says, Amit is having a business of manufacturing of furniture. So Amit is a manufacturer. Okay. Gives the following trading and profit and loss account for the year ended 31st March 2024. So our previous year is 23-24. The P&L account is given to us. You can ask me, guys, that what should be the approach of dealing with these questions. See, the first thing, the first step should be read the question entirely. There might be some points which you might not know. It's perfectly fine, but first of all you should read the entire question, right? So those 15 minutes which you get before the examinations, that is very important. Please utilize them very efficiently. In those 15 minutes, I would highly request you to please read your question paper thoroughly, right? And when you will be solving this question, again, give it a one more reading. Just don't jump into solving the question. I understand that you have to be very quick in your examination, that 3 hours, but first thing first, that you should know what is your question, what the examiner is asking, what the question is asking. You should know that, right? So first of all, I'll be taking that approach. First of all, I'll be reading this particular question, and also because right now we are practicing, so I'll be discussing some related concepts also. So my discussion will take time, right? My discussion will take time, but when you will practice these questions, or when you will be doing in your examination, it will not take that much time, right? So you have to practice yourself. So let's start with question number one. It says Amit is having a business of manufacturing of furniture. Understand, this person is a manufacturer. Getting it? Gives the following trading and profit and loss account for the year ended 31st March 2024. So our previous year is 23-24, and they have given us a trading and P&L account. So let's read this. Sorry, trading and P&L account first. First, we will read the debit side, all the expenses side, and then we will go to the credit side. Okay. So in the debit side, opening stock is written, no issues. It is a kind of business item, so it is opening stock written over here. Purchases, freight, gross profit seems to be fine with me, because purchases, freight, and cartage are general business expenses, right? Bonus to staff, we understand we can give bonus to staff also. If you remember, there is a section 36 also, right? 36 says that if you give bonus to your employees, it is allowed under section 36. Even if you don't remember the section number, that is completely fine, students. Okay, my dear children, it's completely fine. No need to worry about it, because we just have to know that yes, bonus is allowed, right? And if I discuss this particular point also, so we understand that bonus to staff is allowed if it is actually paid. It is subject to 43B, and there is a section 36 says bonus is allowed and subject to 43B also. But you don't have to apply 43B unless and until it says, unless and until the question says that this bonus is not paid, then we can apply section 43B. Otherwise, the question is silent about bonus to staff. It is just written bonus to staff, and in the information nothing is mentioned, then presume that it is paid also, right? Please don't unnecessarily bring 43B into picture. Sir, we think that it should not have been paid. No, it was paid, correct? Okay. So bonus to staff, it's okay with us. Rent of premises, we understand section 30, rent of building, it is allowed. Even I am referring the section right now, but I understand that these sections for you it is quite difficult, because I have now experience of teaching so many times, multiple times. Now I can remember all those sections. But for you, I understand it's a bit difficult. An examiner institute also understand this, right? So, but right now I am referring because it can strike your mind. Yes, it is. It was there. We have read section 30. We have read section 36 and all. Okay. So rent of premises is allowed. It's a business expense. Advertisement, we understand advertisement expenses are also business expense. It is allowed. It is not there in section 32, 36, but it can be allowed under section 37. But yes, if this advertisement is of capital nature, if they will give us any information, they have not given us, but still they might give us any information related to that. This advertisement is related to capital expenditure, then we are not going to allow it. Or they might also give this information that this advertisement expense includes such and such amount, which we have given for the advertisement in political party brochures or political party catalogs. We understand that will not be allowed, right? Because section 37 to be specifically, forget about section. We understand that we have learned in PGBP that if we give any advertisement in political party brochures or catalog, then it is allowed. Then it will not be allowed. Okay. For political party, it will not be allowed. Okay. What else we have in debit side? We have bad debts. We understand bad debts are allowed. But tell me, if it would have been provision for doubtful debts, then we are not going to allow it, right? Provision for doubtful debts are not allowed. Bad debts are allowed. And section 36. Okay. Interest on loan, again section 36. We can take loan for our business. We can pay interest also. It is allowed. Depreciation, sir, it is allowed under section 32. The answer is, or let me discuss about this point, depreciation. See, if in your examination nothing is mentioned in the information, if in the information nothing is mentioned about depreciation, let's say, then we will presume that it is as per section 32. It is as per Income Tax Act, and we are going to allow it. We will presume that it is as per section 32. But in case something is mentioned, if in case something is mentioned in the information, either they are giving you some block of assets, they are giving you some additions are made, some sale was getting took place during the year, then you have to compute depreciation, right? So if they provide you certain information regarding calculation of depreciation, regarding computation of depreciation, then you have to do it accordingly. So first calculate depreciation as per section 32 and then allow that depreciation. Then you will not allow this depreciation. You will simply say no, we will add it back, we will add it back, we are not going to allow it. Then we are going to allow that depreciation which is computed as per section 32. One thing. Second thing is that they can say they can give you a direct amount of depreciation. In this question, I think that they have given us a direct amount of depreciation also. We will read it further. They have given a direct amount of depreciation, that this is the depreciation as per income tax act or as per section 32. Then we will take only that depreciation. So in that case, we will not take this depreciation, we will add it back and we will take that depreciation, right? So to summarize, if nothing is mentioned in the information, we will presume that this depreciation is correct. But if something is mentioned in the information, then we are not going to allow this depreciation. We will be allowing that depreciation. Perfectly fine with us? With all of you, right? Okay. Next is GST demand paid. We have demand is something that GST wants money and they have given us a notice that we have to pay our GST tax. So if we are paying our goods and services tax, that is completely a allowable expense, right? So if it would have been income tax paid, then we understand it is not allowed, right? But GST, custom duties, if it is paid, it is allowed under section 37 also we know, and we understand there is a section 43b also that will come into picture. But here, please don't bring section 43b unnecessary. If nothing is mentioned in the question that whether it is paid or not paid, so we always assume that it is paid, right? If nothing is mentioned, we always assume it is paid, right? So GST, unless and until there is no information, we will assume that it is a correct expense. We are not going to do anything of it. Salary, we understand it's a business expense, allowed. Section 37. Miscellaneous expenses. Okay, if nothing is mentioned, then business expenses are. Net profit. How much is the net profit? 50 lakh 85,000. Okay. One more thing, remember, because the profit is somewhere is going to 50 lakh, although we will compute the PGBP income, but we should keep this thing also in mind, because this profit is going above 50 lakh. So it might be possible, there might be possibility that the total income which we will calculate, either as per default method or as per our optional tax regime, if it is more than 50 lakh, so it can come more than 50 lakh, because why? Because this net profit is going above 50. So I understand the total. We have not done the computation so far, but if it will be more than 50 lakh, then you have to apply surcharge also. So in this question, there might be the scenario of surcharge also, right? Because this net profit is going 50 above 50 lakh. So this should strike in your mind that it is going 50. So there might be possibility of surcharge also, right? Okay. So we have read the debit side. Then we will come to the credit side. Okay. Credit side is sales, fine with us. It's a business income. Closing stock, okay. Gross profit, fine. Gross profit is coming from here, it's fine with us. Income tax refund. We understand we are not going to allow this income tax refund. It is not an income, right? Because you understand, if there is any income tax expense, then we are not going to allow that expense. Even if we have recovered anything from the income tax refund, this is not our income. So while calculating your PGBP or while calculating your total income, please don't consider this. Take it away from here. So we have to take it away. We will be subtracting it while computing our PGBP income. Why? Because this is not an income. Okay. Tell me one more thing. If this would have been interest on income tax refund, if this would have been interest on income tax refund, then we understand that interest which we earn on income tax refund is our income, but that will go in IFOS, income from other sources head, not in PGBP. So if it is income tax refund, just income tax refund, not an income. But if it is, let's say if this would have been interest on income tax refund, then it will not PGBP. We'll take it away from here. We'll take it out from here while calculating your PGBP, but it will go in your IFOS, right? So interest will go in your IFOS. Next point is Warehousing charges 22,50,000 rupees. Okay. So what is warehousing charges? I think there would be something in the information which will be given to us. Otherwise, if nothing is mentioned in the information, let's say if we're just warehousing charges written. First of all, tell me whether it's an expense or it is an income. Sir, obviously, sir, it is written on the credit side of the P&L account, so it is an income. So it's a warehousing revenue. It's a warehousing rent. So if something is mentioned in the information, we will work accordingly. But if nothing is mentioned, then warehousing charges, this is our income. It might be rent. Then it will go in house property. If nothing is mentioned, then you have to open another head. That would be house property, right? If something is mentioned, then we will go accordingly. Okay. Nothing else is mentioned in credit side. So we have read our entire P&L account and we have discussed something also, right? So we are taking time because we are discussing. Don't worry about it. Okay, now we are reading the information. So following are the further information relating to the financial year 23-24. Okay, just give me a moment. It says, first point says, income tax refund includes income tax refund. Remember that? How much was the amount there? 30,000. So this says, income tax refund includes amount of rupees 4570 of interest allowed thereon. So this 4570 is the interest on income tax refund. So out of those 30,000, entire amount is not income tax refund. So only this amount is related to interest. Other amount is remaining amount is income tax refund. So income tax refund is not an income. Whatever is the balancing amount, we don't have to calculate. I am only concerned about with this amount. So 4570 will go in our IFRS. This is our IFRS income. Okay. Second point says salary include rupees 30,000 paid to his brother. Okay. This assessee has paid to his brother, which is unreasonable to the extent of 5,000. We understand what it is. So we understand that if you are paying to your brother, you are a related person, and if you are paying more than the fair market value, so that excess amount, that extra amount is we are not going to allow it. We are not going to allow this amount. So what we will do? We will add back this 5,000 rupees. We are going to add back this 5,000 rupees. And if you would like to mention the section, if it's not, it's completely fine if you don't mention the section. But if you remember the section in the examination, please do mention. Here I'll mention 40A2. If you are paying to the related party and if it is in excess of fair market value, we are going to disallow this. Got it? Simple. Third point says advertisement expenses. Okay, there was advertisement expenses in the P&L account. Advertisement expenses include an amount of rupees 2,500 paid for advertisement published in the souvenir issued by the political party. We understand that if we have given it to the political party for publishing in their pamphlet, brochure, souvenir, etc., we are not going to allow it. So 2,500 would not be allowed. So out of those advertisement expenses, 2,500 we are going to disallow it. Further, they are mentioning that the payment is made by way of account paycheck. Whatever the mode is of the payment is, we are going to disallow it, right? Even if they would have been paid in cash, check, or any banking mode also, because this at the first instance, we are not going to allow it. That's it. Okay. Fourth point. Miscellaneous expenses include an amount of rupees 1 lakh. Miscellaneous expenses include an amount of rupees 1 lakh paid to political party by check. Okay, we have miscellaneous expenses this amount 238,475. So this amount includes rupees 1 lakh, which is paid to political party by check. So we understand if we are paying to the political party, we can get a deduction under chapter 6A. So in chapter 6A, we can claim a deduction. There are deductions 80 GGB and 80 GGC. First one is related to company assets. If the company assets is giving the contribution or donation to political party, they can allow 100% in GGB. Otherwise, other than company, it is GGC. So here the assets is individual. So it is allowed under 80 GGC. Plus, please remember, provided the assessee is following optional tax regime, then we can allow this 80 GGC. But if the assessee is following our new tax regime, that is default tax regime, we are not going to allow this particular deduction. Correct? So anyways, while calculating your PGBP, it will be added back. But yes, it can be allowed under 80 GGC if the assessee is following optional tax regime. Fifth point, goods and services tax demand. Okay, there was GST demand of 162 something. GST demand paid includes an amount of rupees 5,300 charged as penalty for delayed filing of returns. Okay. First part is this is penalty. 5,300 is a penalty. So we understand it was written in section 37 that if you are paying any expense which is contravention of law, which is as a penalty, as penal consequences, you are paying something, so that will not be allowed. So this 5,300 will not be allowed. Why? Because this is the penalty under GST, right? So we will be adding it back. So 5,300 will be added back. Okay. Second point says, and rupees 12,750 towards interest for delay in deposit of tax. So 12,750 is towards interest on delay in deposit. So we have not deposited the tax in time. So for that, GST has charged interest. Is it as per contravention of law? The answer is no. So this is late payment fees. This is just interest. So 12,750, you don't have to do anything. Just you can mention as a note, but please don't do any addition or subtraction, right? It will not be part of your computation. You can just mention a note, say yes, if we have paid interest for delay in payment of tax, it is allowed. There is no issue, it is allowed. But this 5,300, which is as a penalty, which is in the nature of penalty, we are not going to allow it, right? So we have no issue with 12,750, but please give a one-liner note that we are allowing it. We are not doing anything of 1270. Why? Because it is an allowable expense. Okay, sixth point. It says Mr. Amit had purchased a warehouse building of rupees 20 lakh. Okay, they are giving us information something about the warehousing charges which we were discussing. So Mr. Amit had purchased a warehouse building of rupees 20 lakh in rural area for the purpose of storage of agriculture produce. 20 lakh is the building he has purchased for purpose of storage of agriculture produce. This was made available for use from 15th of July 2023, and the income from this activity is credited to P&L account under the head warehousing charges. Okay. Now they are saying, they are now referring to, we understand that there is section 35AD. There is section 35AD. You should remember this section. This is of specified businesses. That 14 types of businesses, right? We understand there were hotels of 2-star or above category, or there are 100-bed hospital, production of fertilizer, cross-country natural gas pipeline, and there are so many other businesses. Also, warehousing for agriculture produce and warehousing for sugar produce also. So here the warehousing for agriculture produce. So this person has purchased is into this business, sorry, into storage of agriculture produce. So it is mentioned under section 35AD. But also please remember, 35AD is only allowed if the assessee is following optional tax regime. If the assessee is following default tax regime, then we are not going to allow 35AD. Remember this, right? Okay. So if the assessee is following optional tax regime, then we can allow this. So in this case, they are saying that those 22,50,000 they were saying about this. So this is the income. This was the income from this warehousing operation. So this is not now, this is not house property, right? This would be PGBP. And which PGBP? Specified business PGBP. So 22.5 lakh is our income. And we can give deduction of section 35AD also. Tell me what is 35AD? 35AD says that if assessee has incurred any capital expenditure except land, goodwill, and financial instruments, these three will not take. I'm again repeating: land, goodwill, and financial instruments. Otherwise, for other capital expenditure, we will give 100% deduction. So here it is not land, it is not land, it is not goodwill, it is not financial instrument. Here it is building. So this assessee has incurred 20 lakh rupees for the purchase of building. This is an allowable expense under section 35AD. 100% we are going to allow this. So we have warehousing income 22.5 lakh. This deduction will be available 20 lakh, and our remaining profit would be 2.5 lakh, right? But Please remember, if we follow optional tax regime. But if we follow default tax regime, then this 35 AD is not allowed in that case. In that case, we will be computing only depreciation, only normal depreciation we can calculate, right? And they have mentioned us the date also, 15/7/2023. So it was in July 2023. It is somewhere in the beginning of the year. So if we have to calculate depreciation, although we will not calculate depreciation, we can calculate depreciation if we are following default tax regime. And we should calculate in that case half depreciation, full depreciation, full depreciation. That is the reason they have given us the July date. So if you calculate the days also, it is more than 180. So in case if depreciation would have been calculated, if we are following new tax regime, then we will claim full depreciation. Otherwise, if we are following optional tax regime, then we will give 3580 deduction. Okay. 7th point. It says depreciation under Income Tax Act 1961 works out to be 65,000 excluding depreciation of warehousing building. Okay. They are not claimed depreciation on this building. They are saying apart from this, we have 65,000 as depreciation. This is as per Income Tax Act. This is as per section 32. So we understand this depreciation which was given in this P&L account, we are not going to allow this. Now we have depreciation as per Income Tax Act. So we are not going to allow this depreciation. We will allow that depreciation, right? So should we allow depreciation on building? It depends. If we are following optional tax regime, then no depreciation on this building. We will allow only 35 AD. But if we are following default tax regime, new regime, then we will allow depreciation also. That we will discuss. Okay. Last point says interest on loan includes an amount of 80,000. Okay. Interest on loan, we have read there for some amount. And it includes amount of 80,000 paid to Mr. Mohit, a resident, on which TDS is not deducted. Okay. So to whom you are paying? You are paying to a resident. They have mentioned that, sorry, they have mentioned it over here that they are paying it to the resident. So we understand that if you are paying this interest to resident, you should deduct TDS, right? And if TDS is not deducted, then 30% of this amount. So out of this 80,000, 30% of this, that is 24,000, we are going to disallow it, right? And if you remember the section, it is 40 small a. Correct? But second question can come in your mind, sir, whether this my assessee is eligible to deduct depreciation also, because this person is an individual. Now we understand there is TDS implications also. So we understand that Amit is an individual. Can individual deduct TDS? So it depends upon their turnover of last year. So last year turnover is not mentioned over here, but this year turnover is mentioned. Although we don't have to take this year turnover, but this year turnover is how much? 2,33,25,000. This is giving me a reasonable point to frame my assumption. See, if the current year turnover is almost 2.33 crores, so I can reasonably presume the last year turnover would also have been more than 1 crore, right? So if the turnover of the last year is more than 1 crore, so Amit is liable to deduct TDS also, right? So here we will write a one line assumption that yes, Amit's turnover is presumed to be more than 1 crore of the last year, right? Of previous year, 22-23 of the last year, preceding the previous year, right? So that is the reason he should deduct TDS, because it is giving me a clear indication. First of all, they have mentioned it also specifically in the question also, that they have mentioned that why TDS is not deducted. Second thing, although they have not given us the turnover, the amount of turnover of the last year, but still I'm getting a reasonable indication by assuming this, by taking this amount into consideration. I can assume that if this current year turnover is 2.33 crores, last year turnover would have been at least more than 1 crore, right? So we can take that assumption. So yes, we will apply section 40 small a, and if you have not deducted TDS, 30% will have been would be disallowed. If this would have been paid outside India or to a non-resident, tell me how much would it would have been disallowed? 100% in that case, right? So here 30% will be disallowed. Now my information is over. Now ask from the question, what do you want, boss? What do you want? So this is the line which is giving me what this question demands from us. So this line says, compute the total income. Okay, we have to compute the total income. One thing. First of all, we will compute the total income. One. And tax liability. See, they needs two things. we have to compute the total income also, and then the tax liability, right? Two things we have to calculate. Okay. Of Mr. Amit for this assessment here. Okay. In the most beneficial manner. They are saying that we have to calculate in the most beneficial manner. Quite a big question now. So first of all, we have to compute our income as per both the regimes, right? So we have to see which regime is giving him the benefit. So in this case, what you will do is 35 AD was also mentioned. So let us take one option first. The first option is, let us assume in the first option, first we will do first option. We will assume that this assessee is not opting 115 BAC, optional tax regime. This person is opting optional tax regime, and we will calculate total income as per optional tax regime and also the tax liability. Okay. And in option number 2, we will calculate as per default tax regime, right? As per default tax regime. That is as per section 115 BAC. So we will calculate total income and the tax liability. But please wait, guys. First of all, see, once you will be calculating the total income as per optional scheme, right? So please don't recalculate everything in option 2. Don't recalculate all those things in option 2. Just see what is the difference there. Let's say you have claimed deduction under section 35 AD over here, otherwise everything is same. So you just nullify that effect of deduction of 35 AD and then you have to calculate it. So here, please don't do entire recalculations. Just take the help of this calculation and then calculate the total income, and then you will apply the tax rate as per default tax regime. If there is any special type of income like long-term capital gain, 111A, 112A, or any casual income, although it was not there when I was reading this question, there was no short-term capital gain or long-term capital gain or no casual income. But if this there would have been, then we have to calculate the tax on that special income also, and then we will have to apply the slab rates. So here we have to apply the normal slab rates of 2.5 lakh one. Here we will apply the new tax rate, slab rates of 3 lakh, that one, right? 0 to 3 lakh, nil 3 to 6, and 6 to 9 and all. Okay. One more. So this tax liability and this tax liability, you have to compare which one, the one which is least, right? The one which is lower, we will say that this is most beneficial. But the question here is, because I have seen that the amount of profit was somewhere about 50 lakh rupees, right? It was somewhere about 50 lakh in net profit. And there is section 35 AD also. There is section 35 AD also. One indication it is giving that there might be point of surcharge also, which can come into picture. One is surcharge, but second is AMT also. Oh my God, AMT. I think, but it is very easy. I'm telling you, AMT is also very easy. See, remember the provisions of AMT. AMT says that if the adjusted total income is more than 20 lakh, where here I'm presuming, because I can give, I can a bit sure that the adjusted total income will go above 20 lakh, right? So if the AMT provision says if the adjusted total income of the assessee is more than 20 lakh, and if this person is claiming either deduction of section 10 AA or section 35 AD or chapter 6A heading C, that is 80 IA to 80 RRB, etc. In that case, AMT provisions can also apply. So in that case, if AMT provisions will apply, then on adjusted total income, we have to calculate tax also at a rate of 18.5% plus surcharge if applicable plus cess if applicable, right? Cess will always be applicable. So, but this AMT provision is as per option 1. So option 1 is optional tax, because in option number 2, in default tax regime, we don't have AMT provisions. AMT provisions are only in option number 1, right? In option number 1. So here, what we have to calculate in option 1, first we have to see the total income. Then we have to calculate the tax liability as per normal provisions. Then we will check whether what is our adjusted total income. If it is more than 20 lakh, then we have to apply AMT provisions also. And whatever is the higher amount, we have to pay tax as per that. That would be the final option number one answer. And then we will come to option number two. As of now, if you are feeling it bit difficult, please leave this AMT portion. Just first of all, right now, what I would suggest to you is whatever you think that you know about this question, whatever you think you know about this question, to try to do it to the maximum extent possible. Try to do it to the maximum extent possible. Even if at some places you will commit mistakes, it's completely fine, guys. It's completely fine. 10%, 20%, 50%, 60%, whatever percentage you know about this question, please do the maximum extent possible, then compare with my answer. So what I am doing is, right now I am giving you some time. You can pause the video here. Please do as much as you know about this question, right? Then you can compare with my answer. So what I'll do is, I am also solving here with you, but I will do in a fast forward mode, right? And I'll do in a fast forward mode, then you can observe what I am doing over here. And then also, after the fast forward mode, then you can pause the video again, and then you try to rectify your mistakes. And after that, I'll also discuss about this question, right? So I would request you to pause the video right here. Whatever thing you know about this question, just try that, right? And then you can resume this video. Okay, I think you have observed this, my computation also. So here you have to write that you are computing the income and the tax liability of Amit for this assessment year. Option 1, you are following optional tax regime. This should be your heading. Then you will calculate your PGBP income. First, I have calculated my PGBP income. First, I have started with net profit as per P&L account. So whatever adjustment was there, I did those adjustment. Income tax refund is not my income, so I have subtracted it. Warehousing charges, why I have subtracted it from here? Because I will be dealing it separately. So here, warehousing income I have dealt here separately for that. That is the reason I have subtracted it from here. Then excess salary paid to the brother, you have to add it back. Please add it back over here. And if you know the section number, please say that yes, this is 48.2. Advertisement in political party not allowed. Contribution in political party is also not allowed. But yes, we will be giving 80 GGC deduction. Penalty for GST is not allowed. That is the reason we have added it back. But about the late interest, that is allowed. So there is no problem about the late interest. Depreciation as per books, we have added it back. But depreciation as per section 32, we have allowed, right? Interest on loan 24,000, 80,000 into 30%, we have added it back. And if you know the section number, please mention the section number also, 40 small a. Got it? So this is your, once you will do this calculation, this is the PGBP income of your furniture business. The person who is, this person is into manufacturing of furniture business. So this is the income from our furniture business, and from a specified business, that is for warehousing for agriculture produce. We have income of 22.5, 22 lakh 50,000, and we will give 35 AD deduction also, because this is the building which we have purchased for our specified business purpose. So 20 lakh is the deduction in this section 35 AD. So 2.5 lakh is the income from this business. So we have two businesses. Total income comes to 32 lakh 34,000, right? And we have only one income, that is from IFOs, that is interest. So this is 4570. So total income comes to 33 lakh 38,620. This is GTI. And we have only one deduction in the chapter 6A 80 GGC of 1 lakh, which we have contributed in political party. So our total income is 31 lakh 38,620. Here you have to calculate the tax. And as of now, there is no special income, there is no LTCG, there is no 112A, there is no 111A, there is no casual income. So you have to apply only slab rates. That old one is slab rate 0.2.0 to 2.5 lakh, nil 2.5 lakh to 5 lakh, 5%, and so on. Right? And should you apply surcharge also? The answer is no. The total income is not going above 50 lakh. So here there is no requirement of surcharge. Okay, so here I have calculated the tax also. So tax comes to 7,84,249 including cess. There is no surcharge, and I have also rounded it off. So this is my tax. Now, should I go and jump on my option number 2 of default tax regime? No. First, I have to check whether AMT provisions are getting applied over here or not. We understand this person is claiming deduction in section 3580. Okay. First point, 3580 is there. Second point, we have to check whether our adjusted total income is it more than 20 lakh? It seems that it is more than 20 lakh. So that is the reason I have checked. Now calculate adjusted total income. So how it will be calculated? Whatever is your total income was, our total income was 31 lakh 38,620. This is our total income. We have calculated it earlier. And we will add back all the deductions which we have given of 3580. If there would have been 10 AA, I would have added it back, right? So 3580 deduction, I have added it back. And also we will give deemed depreciation, because now we are not giving the deduction of 3580, but at least we will give depreciation on that building. And how much is the depreciation building? 10%. We understand building has three rates. If it is a residential building, 5%. If it's a business normal building, 10%. General rate is 10%. If it is temporary building, then 40%. So here we'll take it as a normal building, 10% rate. And they have given us a date also, 15th July something. So that is the reason we will apply full depreciation. So 20 lakh 10%, it would be 2 lakh depreciation. So our adjusted total income comes out to be 49 lakh 38,620. Now we have to check, we have to calculate the tax on this income. And yes, there would be no surcharge. Why there is no surcharge? It is not more than 50 lakh. So you will apply 18.5% tax rate on this income. This is 9 lakh 13,000 something, plus there is no surcharge, but yes, cess would be there. So it is 9 lakh 50,190. So as per AMT provision, my tax is coming at 9.5 lakh something, 9,50,190. But as per normal provision, it was 7,84,000. We understand that if AMT provisions are applied, so we have to see whatever is the higher amount of tax. So here 784 compared with 950. So 950 is the higher amount of tax. We have to pay tax as per the AMT provisions. So here our tax liability would be this much. But yes, if we are paying as per the AMT provisions, we will get the AMT credit also, right? So whatever is the excess amount which we are paying over and above the normal provisions, that is 950, 190 minus this amount, this would be the AMT credit. I have written it over here as well. Correct? Don't worry, I'll give you the this working also. Probably either with this lecture or with next lecture, I'll give you the complete working also. If you want, you can write it also. You can write it down if you would like to write it down. If you would like to pause the video here, let me zoom in. If you would like to write it down, you can write it down. You can pause the video here first. Done. I'm changing it now. Okay. You can pause it here. Done. Okay, I'm changing it. Pause here. Done. Okay. And here. So this is the amount of tax which we have to pay, and we have paid some excess tax. That is AMT credit, right? So this is option one. This is option one. Now we are coming to option number two, that is default tax regime. And now we don't have to recalculate everything. We will just take the help of the calculation which we have already done for our normal tax regime. So as per default tax regime, as per 115AC, BAC, sorry, option number two. First of all, PGBP income. So furniture business, there is no problem. We can take that value. So furniture business income, we have already taken it from there. It is 29,84,050. And for warehousing business, because now we are not going to allow 3580 because 3580 is not there in new tax regime, right? But we will give depreciation. So whatever is the income which we have earned, we are not going to give 3580, just we will be giving depreciation. So we have given a depreciation of 10% of 20 lakh. So 2 lakh is the depreciation. So the income from warehousing business comes to 22.5 lakh minus 2 lakh, that is 20 lakh 50,000, right? So my total PGBP income comes to 50 lakh 34,050. And yes, there was IFOS income also, that interest. So if I'll add it, GTI comes to 50 lakh 38,620. Now this is my GTI. Then chapter 6A deduction, but you understand in default tax regime, we don't get chapter 6A deduction except these three sections we have. 80CCD2, 80CCH2 and 80JJAA. And all these three sections are not here in this question. So we are not going to give any type of chapter 6A deduction, is nil over here. So our total income comes to 50,38,620. Now you have to calculate tax on this income. But first of all, see whether there is any special income like long-term capital gain, 111A, 1128, etc. There is no such income. So here we have to calculate tax as per the normal slab rates of 3 lakh. So I have here calculated the tax rate, tax amount, and the total tax comes to this one. And because my income is more than 50 lakh, surcharge will also apply in this case. So we are going to apply surcharge also. So surcharge is 10% on this tax. Total comes to 13,32,744. Should I apply 4% cess? No. Because I can see that our income is little bit more than 50 lakh, little bit more than 50 lakh. So again, there is one more concept of marginal relief. See, such an interesting question. It has given so many things in this question itself. So there will be a concept of marginal relief also. We have discussed that the same type of concept which we have discussed in some that MCQ also of rebate. The same type of concept will apply over here also. So first we will calculate tax on 50 lakh plus whatever is the excess amount over 50 lakh. So excess amount over 50 lakh is 38,620. Remember, see, first we have to calculate tax on 50 lakh and excess over 50 lakh is 38,620. We will club it together. We will call it A. So we are calling it A. Tax on 50 lakh plus excess over 50 lakh is this much. So tax on 50 lakhs comes to 12 lakh. This is as per new regime, and plus 38,620, whatever is the excess amount over and above 50. So this 12,38,620 is called as A. Now we will see how much is the tax which is coming. Here it is 13,32,744. This is B. And if B is greater than A, then there would be a relief also. And how much is the relief? B minus A. So here the relief will also be there. So our tax will come to 12,38,620. Right. Now you can finally apply cess. This is your tax liability and you will round it off. So here your tax liability is coming 12,88,160. 12,88,160. And there, as per normal provisions, although we have followed AMT, but there was tax of 9 lakh something, right? There was a tax of 9,50,190. So then here you have to give your final conclusion, your final wording. That is very important. Please don't leave the question right here. Don't leave the question right here. You have to give your final conclusion. Yes, here it is most beneficial for the assessee if this person follows optional tax regime, if this person opts out from 115 BAC. So here I have given my final decision also. It also contains marks. Please don't forget to write this. You can write it in your own language. That is okay with me. But yes, you have to give this decision. This person should follow as per optional tax regime. Right. So this is question number 1. If you would like to write it down also, you can pause the video here. This is option 2. Right. Done. Okay, I'm changing it. You can pause the video here. Okay. And next one here. Right. So this was question number 1. Quite huge question, I can say. This much thing will not come in your examination, but yes, it is good for practice purpose. Okay. Now what I'm doing is I'm now pausing over here. I'm stopping the video right here. So let's keep this as part number 1, and in part number 2 we'll discuss the remaining question number 2, 3, and 4. Right. So till then, I'll meet you in my next lecture now, and when we will be discussing this question number 2, 3, and 4. Until then, take care, bye bye, and keep learning. Right, bye, take care.